Natural gas stayed above 2.2 levels this week, as we had discussed in our last week analysis that till the time 2.06 is respected, you can expect it to rise and see how this is the first cycle, second cycle, and it is on the verge of third cycle. But yes, it has yet not breached 2.4 levels successfully. If it stays above this, certainly you can expect it at reverse. So now what to expect next week? Can we expect more bullishness from natural gas, or is it going to drop below 2.2 and in fact breach the previous lows? Which position we should take trading natural gas next week, we will see with the help of charts and followed with indicators. Towards the end, we will summarize and give you the trading levels and strategy. Do watch till the end. Do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon, which keeps you updated for the with the twice a day analysis and targets which I share for natural gas. First with the Asia session, next with the US session. Do watch both of them. Also, you can remain updated by joining our free Telegram channel. The link is mentioned in the channel and video description. Let's start. First, we'll look into weekly charts, and you can see forming the bottom here at 2.06. Also, if you look at that was a good reversal sign there, and since then we can see there are a couple of waves here: rise, retracement, and see beautifully it is yet respected the higher lows. So this is an expanding triangle, and this is a bullish expanding triangle. Hence, till the time it respects 2.2 levels next week, we can easily stay bullish for natural gas. So this is one point to note. Below 2.2, more bearishness may prevail till 2.1 levels, and if it breaks below 2.1, you can say that net gas has turned bearish. Now, what could happen here is, see, previous candle was a green candle, but a form of consolidation here. Higher lows, lower highs completely engulfed between the previous candle. Thus, the price is not willing to stay bullish. Now, what could happen if it opens above this zone and it stays above 2.32? You can still expect 2.34, 36, 38 and 2.4. Staying about 2.4, you can say that it is reverse, and then we may see another big bullish candle followed with another big bullish candle, which might take the prices a little up. In fact, it can breach 2.8 levels again, and we may see it flying high till towards $3 levels. But that is not going to possibly happen in a week or so. It is definitely going to take a little time. First thing is for it to come out of the consolidation zone and stay about 2.4 level. Next is to have a look at the charts on natural gas. See, this was the previous consolidation here at sub $2 levels. It has almost achieved this zone, and coming from the highs at around $10, where you can see almost 80% of the price is depreciated here. So now it is looking forward to a slight rise. However, so far we have seen lower highs, flat bottom. Let it go past beyond 2.8 this time in the month of June, and then you can say that it is going to show you extremely good rise. Now this is on the weekly charts. Now look at the daily chart. On the daily charts, interestingly, triple bottom, rise, retracement, rise, retracement. So what we had seen on the weekly charts is getting replicated here. At the same time, another observation is the higher lows what it is seen, and hence 2.2, 2.18 levels are still a very good support. With that as support, we have seen it rising, and we have seen it trading in the expanding triangle. Now look at the daily charts here. See higher lows here, and here also for the near terms for last 7 to 10 sessions, you can find out this is also trading in the expanding triangle, and hence first thing is, in fact, if you see it trading below 2.24 levels next, you can sell for 2.2, and below 2.2 further bearishness may prevail. Remember this fact. At the same time, this is also giving a reversal sign here. So I will wait for it to, in fact, break past this zone at 2.38. Beyond this, certainly, you can say that it is reversed, and we are going to see higher highs till towards 2.5 levels. So now a larger zone where one has to remain cautious is between 2.18, 2.38 zone. This is almost the zone where we have to extremely watchful there, because right now you can see it is giving a reversal sign, and hence second red candle can follow before looking forward to an upward move. Now let's have a look at the monthly. On the monthly charts, what has happened? See bottom there. After the bottom, higher lows are seen. Previous candle was a swing candle. You can see higher lows here till towards 2.8, and the bottom there at around 2.1. At the same time, if you look at, see one candle, second candle, third candle, the highs for this candle are now situated at around 2.6, 2.7 zone. What it has done, it has already done with the higher lows. And specifically if it stays about 2.4, this is the resistance level here, you can see it hitting possibly these levels at around 2.7 in the month of June, and in fact it can fly high. See, one green candle, a swing candle, and then second green candle may follow here, which might take the prices a little higher, and hence any point of time if you see it staying about 2.4, one can stay bullish. Now this is the one part. Now let's have a look with the help of indicators. What are the indicators of this? Now looking at indicators, see, first of all, the 20 and 50 period exponential moving average are on the verge of a crossover, while the simple averages are still far above, and hence which are not yet indicative of bearishness. At the same time, the bottom here is giving it a very good support at around 2.06, 2.1 levels. Now if you look at, I also one more point to see here is, see, firstly the prices diverge from the moving average, and we have seen the conversion here. Now the prices diverge from the moving average, we can see the conversion there, which means that it will increase the chances for net gas to rise till towards at least $4 level in the near future. Now look at directional movement. This is moderately bearish. Stochastic is oversold on the monthly charts, which increases the chance of a pullback. The MACD has also seen the highs there. It is peaked here and it is looking forward to converge here, and this suggests that there is a possibility for a rise, and possibly we may see month of June trading in green for net gas. That is my expectation. RSI almost flat here on the monthly charts. Now look at the week. On the weekly charts, see the moving average, the 20 and 50 period moving average crossed over here. Then there is a crossover between the 50 and 100 period moving average. Now this is a classical bearish formation where all the moving averages are stacked one above other. Here you will find the 20 and 50 period exponential moving, simple moving average crossover, and now the 50 and 100 simple moving average have also crossed over. Also, if you look at the 20 period moving average is now situated with a, and it is trading with extreme divergence, and hence a possible little conversion, and hence a little rise can be expected. Now also if you look at the prices diverge from the 20 period moving average, now moving average is also stabilized, the prices are also stabilized. There could be a little rise till towards $4 levels in the next coming few weeks or so. My expectation is there that it can try to show these levels. Directional movement bearish, stochastic has dropped. MACD here has crossed over at bottom. It is still trading with divergence and it is still trading bullish. And see, now remember, this crossover has happened at extremely lower levels, and from there it is trying to retrace, and it can continue for a little while, though a little swing can be expected. But yes, in the near term it can stay bullish, and hence we can maybe, when I say near term, I am looking at 3 to 6 months of horizon, we can expect higher prices for net gas from what it is trading right now. Now look at the daily charts. On the daily charts, getting the resistance from the 20 and 50 period moving average at around 2.4 levels, prices are willing to stay bearish. Also if you look at, see, there was a slight crossover here. Now again the prices are bearish when the 20 and 50 period moving averages are trading with divergence. Hence 2.4 levels is something you should watch out for, only beyond which little more bullishness can be seen. Direction movement here is moderately bullish, trying to converge. Stochastic is near to overbought, now looking downwards. MACD is bearish, it is divergent again. RSI is also trying to look down. Now we have seen the charts, we have seen the indicators. Time for me to conclude and define for you the trading levels and strategies such that you can trade profitably. And before we proceed, if you want to learn this art of trading profitably, you should join my mentorship batch. The 23rd batch starts on 1st of July. Equip yourself with the tools, techniques, and strategies which can help you become a profitable and independent trader. Also, you can be part of my signals channel where trading as per the signals definitely you can benefit. Reach out to me via Telegram or email for more details on any of these. Now, first, let's have a look at the levels to buy. I will recommend you to buy here at 2.32, but then 2.38 is a major resistance, and then 2.4. Till 2.4, rather I will say this should be treated as a single zone, and only if it breaks beyond 2.4, just stay long, and you are going to look at 2.46, 2.5 levels, and beyond that we can expect it to hit 2.65, and then higher highs can take it till towards the 2.8, and 2.7 zone is something which is the next critical resistance if it continues its move on the upside. Beyond that, $3 levels is the target here, and hence yes, it can achieve in the month of June, but one has to remain extra cautious at around 2.7, 2.8 zone. Very good resistance exists there. Specifically, if it stays above 2.4, just stay long. Possibility of it to give you more bullish momentum exists here. Remember, it can try to achieve 2.5 to 2.65 levels before looking forward to a retracement on the downside. Now, where to sell? This is the only where we have discussed about the possible buying entries. Now, at the same time, we should take the alternative scenario of a sell here. And here I will recommend you to sell here at 2.25, a little below, and then 2.22. 2.2 is the major support, and if it breaks below 2.2, you can expect a little more drop, taking it till towards 2.16, 2.11, and then 2.06 levels. I do not think that it is going to drop till here any point of time. I think even if it tries to drop, it can show you a very smart pullback there. And even 2.1 levels, I don't expect it to break for sure. Very clearly, I don't expect it to break below 2.1 any point of time soon. Yes, 2.2 levels is what we can see max, which is going to be a great support, and even if it breaks till there, it can show you bounce back recovery. So hence, take your trades accordingly, take your positions accordingly, trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe, and comment. Join my mentorship batch, join my signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.